Welcome to the Investor Shed Podcast with Nick Beveridge, the ultimate source for all things investing and beyond. For free tools, tips, and tricks, go to northidahorei.com. Today's episode features Nathan Helm. Nathan is a seasoned real estate investor who primarily focuses on multifamily investments in Washington state. He has perfected his property management systems with over 80 personal units and owns his own construction company. Stay tuned.
Nathan?
Hey, how's it going?
Very good. How are you?
I'm pretty well.
Thanks for coming in.
Yeah.
This is the
Glad to be here.
brand new media room here at Keller Williams.
Yeah.
We got a plant, a wall, and behind that wall are some bathrooms.
Yeah.
So maybe you'll pay attention to the audio. You might be able to hear toilets flush.
Pay attention.
It's a horrible way to start.
Yeah.
But Nathan, so you are you're kind of like a mega investor.
I guess that's what you call me now.
You got over 84 units.
Yeah.
And counting.
And counting, yeah. Poised for growth, actually, right now. The real hurdle for me is the current market. So
yeah,
I invest for cash returns, essentially. So if I was waiting for additional market growth, maybe I would be able to continue to invest. But for cash returns, I'm just kind of holding for the most part right now. So
okay.
Waiting for opportunity.
Yeah, and right now it's middle of 2020.
Yeah.
So take us back.
Mm-hmm.
What first got you interested in real estate investing, and when was this?
I've actually always been interested in real estate and had kind of a knack for both evaluating the numbers, the returns, as well as the construction side. So I actually started right out of college. I bought my first house, and it was my personal home. However, I bought it for the return, essentially. I knew I wasn't going to be living. That was in Longview, Washington, and I knew I wasn't going to be there forever. So I found a property that was priced decent in the market with an upside potential, and did a remodel and ended up turning it from a 3-bed, 1.5 bath to a 4-bed, 2-bath.
Oh, okay.
And sold it for $100,000 more than I bought it for after just over 2 years.
Not too bad.
So, not bad, and that ended up being the seed money, actually.
Yeah.
That was back in 2005 when I listed it in 2005. I sold it right at the beginning of 2006 and turned that one house into a second house, a duplex and a fourplex, and I've been growing since then. So
nice.
that $100,000 was the seed money for where I am today.
And that was a pretty decently hot market back then, right?
Yeah. I actually got criticized for buying 3 properties in 2006 when I did it.
You know what's funny, looking back though, like I would have loved to buy properties right at the peak back then. I'd be sitting just fine today.
Well, I bought for the cash flow.
Yeah.
So the mortgages were paid. I needed just, if I kept about 50% occupancy, I could pay all the bills. So the other 50 I reinvested into improvements, and ultimately did a little sweat equity and did a cash out refi, and I've been kind of following that pattern ever since, finding properties that are either if you want to call it under-maintained or poorly managed properties as well. Those are great ones because that means the rents are low, and you just do a little rehab and have a little nest egg. Keep it rolling.
So do you remember what actually got you interested in real estate investing? Like what was the tree,
So it's kind of a weird thought process, but as I was going through college, initially, this is like a really big rewind. I was looking at careers that would give me a pretty decent pay, I guess, salary, whatever you call it. Anyway, but I've always kind of been interested in working for myself as well. And I was looking at like the whole doctor, lawyer type thing, and was really interested in being an orthopedic surgeon. But as I looked at how doctors and lawyers get paid, they only get paid when they show up. And I was like, huh, all right, as long as I show up, that's a lot of money,
Yeah.
right? However, I'm kind of interested in getting paid for not showing up.
Right.
So I
So how
started
many years
looking
into
at
college
careers.
did that go
2
through
years.
your
It
mind?
took me 2 years.
2 years.
And I
Okay.
ended up taking a business class and was like, all right, I'm switching paths. So I was, I was in the prereq side of things. So looked for careers where I could have more of a long-term impact, long-term pay, without necessarily having to be in front of customers all the time. And real estate meshed perfectly with that, especially when you're talking about rentals, because I have renters that I don't think I've seen for a couple of years that still send their rent checks in, and everything's hunky dory. So
Right. Yeah. Because you manage all your rentals too, right?
yeah, we're pretty well vertically integrated. So I'm the investor. I have a general contractor's license, so we work for ourselves.
Okay.
Rehabbing properties. We also hire ourselves out for other jobs, for other investors, or just flat out, like home remodels. We specialize in residential for the most part.
So when you keep saying we, just so do you have
my
employees
wife
with
and
you?
I.
Or your wife?
Oh
and
yeah,
okay.
yeah. So my wife and I are the team.
Okay.
Essentially, we run the show,
Right.
not I.
So are you also?
She
And when
mostly.
you say you're the contractor, are you like you're the general contractor
I'm
and
the
you have a
general.
contracting company? Are you? But you're not out there swinging hammers, right?
Very rarely.
Okay.
Sometimes I am.
Sometimes. Okay.
Yeah.
So you get your hands dirty.
Yeah, yeah, and a lot of this is built upon, what I've done over the years. I mean, when I first started, the only person that was working on the properties was me, and whoever I could have trick into coming and working for me for a few days here and there. But at this point, we're we have 2 employees that work in the field full time. We have 1 office employee that works full time along with my wife, and we're actually looking to hire 2 more, a crew lead and another crew member
Gotcha.
for the construction side.
So right now, with all that you have going on, you'll essentially have 3 employees. Is that what I'm hearing?
When all in, no, it'll be 5.
It will be 5. Okay. Does
Yeah,
that include
we have
yourself
3
and your
right now.
wife?
Nope.
Okay.
Nope. I'm actually trying to scale myself out of the business.
Okay.
So
That's a good idea.
yeah.
So, if we can go back again to your first deal, you're straight out of college. How were you able to buy a house straight out of college? Did you have a good job right away? Or
Flat out hustle.
hustle?
So I graduated college with no debt. I paid all my tuition going all the way through. I got married after my first 2 years in college as well. So my wife was working full time, and I was working about 35 hours a week. So when it was all said and done, there's nothing more than grit and hard work that went into it,
Okay.
and just being smart, because I had 20 grand in the bank the day that I graduated.
Wow.
So that did the down payment and
you paid for your own
funded
college.
everything. Paid my way through. Yeah.
Good on you, man. That's tough to do.
Yeah.
Most people just take a loan,
Well,
figure
a
it
lot
out
of people,
later,
people
and then
like
they
to-
don't.
Yeah, people like to party.
Yeah.
So it's just a different mentality.
Yeah.
So
All right.
I've been kind of on the fringes of, I guess, what people normally do for quite a while.
Yeah. So you're a long-term thinker.
I would say that. Yeah.
Yeah. Okay. So you buy that first house. A couple years later, you put your own, I'm guessing, your own sweat equity into it. You turn it into a 4-2.
Yeah.
You flip it a couple years later.
Yeah.
What's the next house you buy? Do you move into that one as well?
So we bought a 4-plex and a duplex and a house. But
Fourplex at a duplex and a house.
Yeah,
All at
so
the same time?
All at the same time, like literally, like within a month. So I took that $100,000 and I just split it 3 different ways. Found 3 deals that I was interested in, and we didn't move into the house though. You would think, you buy a 4-plex and duplex and a house, you move into the house. I moved into the duplex.
Okay.
And the house stayed vacant, and I did a remodel on it. So ended up tearing the roof off and adding a second story. So
Wow.
that one was an interesting project. It was an old Craftsman, and I matched 1920s style construction through the whole thing. So it has that one went from 1,100 square feet to 3,000 square feet when it was all done.
Did you have like contracting experience prior to diving into this?
No. No. I'd worked with my hands like for my dad growing up, but that was manual labor type stuff. So I think a lot of it's been, just being the capacity to put ideas together and make them happen. So
Okay.
I'm not the guy that was swinging the hammer on that second
Okay.
story either. I hired good contractors to get me to the point where all I was doing was the final finish work. So like I did the doors and the flooring, and I mean minus carpet and stuff like that. I did all the tile work myself, but I don't frame, I don't roof, I didn't do the plumbing on that one. I actually did my own electrical though. I rewired the whole house on my own. So a little bit here and there. Yeah.
Okay. So do you mind if we dive deep into the details about this, if you can remember? So you go from one house to now you have 7 units, duplex, fourplex, and a single family.
Yeah.
Moving to the duplex. What'd your cash flow situation look like once you got everything rented, and versus like what your mortgages were?
So
do you remember?
Yeah, I was sitting at about 50% of the total rents were my overhead, meaning my mortgage. Actually, it was probably a little bit more than that because I'm not counting
Utilities.
The insurance. Water, sewer, garbage was included in that 50%,
Okay.
but the insurance and property taxes weren't. So all in, I was probably closer to about 65, 60-40. I'll just call it that.
Okay.
It was a pretty sweet deal. The fact that I had some of that rent was able to be put in reserves toward remodels in the future.
Yeah. So do you remember what your cash flow situation was like back then? Like how much were you netting approximately each month?
That I don't know.
Okay.
I'm
just curious.
That's a big rewind, but
Yeah.
I'll actually give you the numbers from when I bought it.
Okay.
So I'll use the fourplex as an example. The fourplex, it had gross rents coming in of $2,100, and I bought it for $185.
Okay.
And obviously you got your mortgage and stuff on that. So the way I made my decision on that was really, really basic. I used the 1% rule essentially, where I was like, if I'm going to buy it for $185, can I pull at least $1,800, $1,900 a month in rent out of the deal day one? And the numbers were super simple. It was $2,100. So I was like, all right, I'm going to pull the trigger on that.
Yeah.
And that was me kind of learning along the way. But I thought, okay, that's a really safe way for me to invest. Thing is, nobody taught me the 1% rule. I just was like,
You just guessed.
This is. I know these are safe numbers. That's how I
Yeah.
did it. And then quickly within the next year, I started doing remodels and got my rents up to from $500 for a 2-bedroom unit to $750. And then they've just gone up. I still own that building, and the 2 bedrooms at this point in that building are rented for $950 to $1,000 a month. So, and then I got a 3-bedroom that's rented for $1,200 a month in that building. So, considering total rents were $2,100, we're now looking at close to $4,000 a month.
So, yeah. So in the last 13 years or so, rents have doubled.
Yeah.
That's
For me, they have.
for you. Yeah.
Yeah, but
That's pretty
I
intense.
push a
Feel
little
bad
bit.
for the locals.
Well, I puch value into the property.
Right.
though.
Okay. That's right. You do.
Because
fix up.
because it's honestly not the same unit
Okay.
as it was, in 2006 when I bought it. Obviously the square footage is the same, but the finishes are different. Thing is, everything that I've done though is more so the cosmetics on the unit. I haven't changed the bones of it. I actually didn't even have to change the cabinets out in any of them. So I've owned it for close to 15 years at this point, and it still has the cabinets in it from 1960s when it was built.
Nice.
They're solid.
Yeah.
So,
Yeah. Why tear them out?
as long as people pay rent for it, I'm good.
Nice.
And it's a comfortable place, you know.
Mm-hmm. So I hope you don't mind I'm diving deep. I just want to know what's the realistic progression to get to 80 something units. And so 2003, you go from right out of college, you buy a house, you move into it, you fix it up.
Right.
You sold it 2 years later, you go from one house to 7 units. Sorry, not 7 houses, 3 properties.
Yeah.
How much, and then you're living in the duplex. How much time goes by until you get the next property, and what did that look like?
It was actually pretty slow because I was learning along the way.
Yeah.
You know, nobody's a professional investor to the day they buy their first property, and if they say they are, they're lying, because you're always learning. But the time period for me was from 2006 to 2011. I didn't buy anything, and I closed on my next property. I believe it was 2011 when I did that. It might have been early 2012, but that ended up snowballing me a little bit because, and the other catch point in this whole time is, you know, the market crashed in 2008.
But you survived it. You kept your properties, right?
We actually did really well. So that's where you had people who were criticizing, you know, the investor, people who came in at the top of the market. Because my numbers were good in 2006, the decline in the market overall in property values actually had zero impact on me.
I've heard that a lot.
Yeah. Most of the people I was renting to couldn't qualify for a home loan anyway, so they were happy to pay rent. And in one case, we actually rented to somebody in the duplex who lost their home. And it was for the investor side of things, it was a really easy time for me to find renters. And in that case, I raised rent a little bit. You know, money was tight for everybody, but collecting rent wasn't hard because it was, it was a necessity in life. Everybody needs a place to live. And just because the market's on the skids doesn't mean you're going to go homeless for the most part. So anyway, that's kind of where we came in.
People usually make their housing payment before they make their boat payment.
Yep, or the credit card payment, or the cell phone payment sometimes. Yeah, it's usually pretty close to the top of the list.
Yeah.
So anyway, things 2008 to 2011 were pretty slow, but I was pressing additional value into the properties during that time.
So you were making improvements these 5 years.
Right. And banks weren't super excited to lend on properties. So even when I looked for my refi in 2011, which funded the next deal, it seemed like it was a kind of multi-step process where they were a little bit hesitant. And I actually got told during that time as well, by the bank, the primary bank that I was using told me that they had no interest in non-owner occupied properties. It was not something they wanted to invest, quote unquote, or lend on.
Right.
I don't bank with them anymore, surprisingly.
Because primary residences did so well at that point.
And the multifamilies, which actually collected pretty decent rent,
that
they weren't
backwards
interested
thinking, huh?
Yeah. So I kicked against the pricks a little bit during that time period, found a good cash out refi. And the thing is, I was looking for cash.
Okay.
The cash out refi was what they were hesitant on.
Okay.
Yeah. So anyway, we pushed forward.
Was Fannie Mae just not offering that at the time, or was it bank overlays?
You know, I don't know what was driving it. I just know as a consumer that I was, literally knocking, cold calling banks at that point.
Okay.
Trying to find somebody that was willing to lend. And the thing is, I already owned 4 properties. So in that time period, the lending was a little bit tight.
Yeah, that's right.
And I owned 4 properties, and they were looking at, like, where's the threshold on this guy?
Yeah.
I was considered at that point high risk.
High risk because you are financially stable.
Because I'm a great investor. Yeah. Yeah. So that was what I was bumping up against. So that anyway, it was a little bit of a learning process as well, and that process actually taught me how to work with banks, and I became more savvy in giving banks what they're looking for, to the point now where I ask a bank for money, and I'm under contract to buy a property right now, and I had banks fighting to give me a lower rate so that they could get the deal.
That's great.
That's a unique position to be in as well. I escalated in 2012. I went from the 8 to, I think I went to 13 almost immediately. And then in 2014.
So what are these other, were single family or multifamily?
Almost all multifamily.
Almost all. And are they small multifamily, or do you have any apartments?
I do. Yeah. So I have, my biggest is 18 units. But I have 18 units. I have a 10 unit. I have a 13 unit property, but it's all duplexes. So it's kind of unique. I own an entire cul-de-sac of duplexes. So
how'd you buy that?
Interesting.
Did you make it?
No. So it was an investor that was coming up on their call on their loan, and confided in the bank that they weren't a very good investor and needed to get out. And my loan officer, who I had done a deal with previously, called me up and said, this may be of interest to you. So it was on referral.
Wow.
So he's like, you do the deal, you figure out how, what you're going to pay for the deal. But the guy doesn't want to be a landlord anymore.
It's got to be a unique position where you own every house on a little cul-de-sac.
Yeah. It's
like you can pretty much improve the neighborhood.
Yeah. That's actually how I describe it.
Or you can run it down.
Totally right.
You have complete control.
When people come to look at the duplexes, they say, well, how's the neighborhood? And I say, well, I control the neighborhood, so it's pretty good.
Uh-huh.
And it's always one of those, lighthearted type things, because people, they want to live in a safe place. They want to know that not only the immediate apartment or duplex that they're renting is safe, but also that the community that they live in is nice.
Do you mind opening up a little bit about the numbers of this street that you bought with the duplexes, and what did it cost you and what does it make you?
Sure. So there's 13 units with a coin-op laundry on it. Trying to think the exact price I paid. I think it was $630,000 for the 13 units.
Wow.
That's what my original.
What area of town?
It's actually in Deer Park.
In Deer Park, okay.
North of Spokane, yeah.
Yeah, my brother lives out there.
Yeah, so do I. So that was part of the reason the banker called me. He goes, "This is your neighborhood. I don't know what the investments are like out in Deer Park, but
I didn't even know there were duplexes out there."
That's actually, it's kind of a sweet spot, because Deer Park is not the easiest town to build in. Mm-hmm. So there's not a lot of. We're getting more developers coming in, but not a lot of multifamily. So it's an underserved market. It's kind of a bedroom community to Spokane. Spokane's growing on the north side already. So rents in Deer Park are equal to or higher than they are in Spokane for an equivalent unit.
I can imagine that. Yeah,
so,
it's a nice area.
Yeah.
So the banker that brought you this deal, did he finance it for you too?
Of course he did.
So how much down do you remember how much down you had to put?
I plan for 25% down on all of my deals.
Okay.
So, and then, I think that's what I put in, because that's pretty common. It was a commercial loan as well. So we ended up financing the entire cul-de-sac on one loan, even though it's 3 parcels. So I call it a 13-unit property, but the way they have the cul-de-sac divided, it's a 4-plex and a 4-plex and a 5-plex is essentially how it's divided out. But it feels like its own little community. So anyway, got that for $630,000.
How long have you owned that?
Not crazy long. I think I bought that in 2016.
Okay.
Yeah.
Is that pretty easy to manage then?
Well, when you have, it's all about scale. Like my recommendation for like a MAPA type investor, if you want to call them that, is if you have anything under 10 units, you should probably just turn it over to a management company, because the hassle isn't worth it. You have to manage legal documents, you have to manage, like landlord-tenant law, and unless you have some processes in place and can put some backing behind that, it becomes a hassle. And that's I've always managed my own units. However, I've always planned on scaling higher. So
Right.
we've used the time while we were managing our own properties to really learn what works and doesn't work. And I've paid lawyers a fair amount to make sure that I'm right.
Right.
So that's kind of been the learning process.
Yeah.
For me, I'm not a realtor. So, a lot of people think that they need to be a realtor in order to understand the market. But for me, I kind of, because I only manage my own stuff to date, I don't, in Washington, you're totally fine to do that. And I actually I launched when I got to the point where I was about 65 units. And I got to, and I had a number of properties that were paying to their own individually owned LLC, and it just became kind of a burden to have checks coming in for. It sounds kind of stupid, right? It became a burden to have checks coming in the name of multiple LLCs.
Yeah.
So we put kind of a brand to it and launched a property management company that everybody pays into the single property management company, and then we divide it out on the back end.
Okay, that's interesting.
Yeah.
Yeah. Yeah, I can. People are listening. Oh, poor Nathan. It's all these checks coming in.
Life's tough,
with these different names.
Well, I think the saying of "more money, more problems" is actually true.
Yeah, it's a lot of responsibilities,
more to think about, and the thing is,
you have to be really well organized when you start scaling.
100%, and it's not. I'm not just dealing with numbers and paperwork. I'm dealing with people's lives. So I feel a heavy responsibility to make sure that, I have some responsibility to the folks that rent from us as well.
Yeah. Part of what I love about I use property manager, but I started off doing it on my own, and I was able to manage one unit kind of, but I kind of realized pretty early on, I knew I wanted to scale someday, and I wasn't going to be the property manager, so I should always make sure I budget for it.
Sure.
And just do it. But I remember when I hired a property manager, he was able to get a little bit more in rent, which covered his fee. Mm-hmm. And they were able to take over. I didn't realize that they would be able to take over like all the billings for water, sewer, garbage, and all that. And just they were so much more organized than I would have been. So part of what I'm paying for is organization.
Yep.
And when you do your taxes too, and I might be wrong on this, but I'm not really paying 8%, because if I did it on my own, I would be paying taxes on the money I'm making, versus if I'm paying a property manager.
It goes, that 8% goes to the property manager pre-tax.
Right, but it's still an expense for me.
Yeah.
So I'm really paying closer. If I were to do it myself versus a property manager, it's really about 6% is what the actual fee is. Does that make sense?
Yeah.
Unless I'm doing it myself.
Right.
And you just don't have the headache. But it's just so much easier to just not, I don't know any of my tenants. Mm-hmm. That's a huge burden off my mind. I don't know. I really see. You
could show up to the property and they just think it's some creepo standing outside.
Sure.
And it's your property. So that's nice. Yeah.
Yeah. It's great. I guess you always have to have the right property manager.
That's true. Yeah.
I'm very pro property manager.
Sure. Yeah. And the thing is, your point is very similar to the point that I made, that until you scale and can pay for employees to do your job for you, it doesn't make a lot of sense. Like, for when I was at 6 units, I probably shouldn't have been my own property manager. But over time, I've been able to. I am the guy that's pushing rents.
Right.
I am the guy that's causing the profitability to increase. And I have a friend who's a realtor, broker actually. He owns his own brokerage, and up until about 5 years ago, he had a property management division and didn't sell it. He just closed it. And I was like, why did you do that?
Oh my gosh, so many people would love to buy it.
Yeah. And I said, well, why did you end up doing that? I mean, it aligns really well with your business model, being a realtor and having the contacts and all this other stuff. He says, his quote to me was, "I don't have the personality for it." So there's a lot that goes into being a property manager, and just because you're a realtor or even a broker or have your own brokerage, that doesn't mean that you should be in the property management game. So I think you need to know a little bit about yourself as well to know if you can stomach dealing with both the good and the bad that come as a property manager.
Well, what I learned early on with me as a property manager was that it was very difficult for me to say no to somebody.
Right. You are not a good property manager.
I found that out real clear. I mean, I'd let people break their leases. Sure. Why not? It sounds reasonable. Right. I can probably get this re-rented. Yeah. Whatever you want to do.
Yeah.
It was just always, I was trying to please them before myself all the time, just to not cause an issue.
Right.
And I would have anxiety just oddly about like the weirdest, stupidest things. Like, man, what if this fridge goes out because it's 2 years old now, and they call me, saying that the fridge isn't working? They're gonna sue me. Stupid things like that. Like, I just don't have. What I'm also paying for is just the peace of mind that I just don't even think about it.
Sure, you don't get the phone calls.
I don't get any phone calls.
Yeah.
By the way, that fridge is working just fine still. It's been It's been 5 years.
Well, who knows? This could be the year.
Yeah, I'm prepared for it.
Right.
But it's freed up my time and peace of mind to just go out and make real money.
Sure.
And I know someday when I have 100 rentals like you, maybe it'll be wiser to step in and maybe create a company, because it might be cheaper to have an employee manage it versus just pay. Because I don't know how much in management fees, if you were to just dump it on somebody else and pay 8%, would you be making somebody a fortune?
Yes. And I'm honestly, so the property that I'm under contract to buy right now is financed exclusively out of the property management fees that I charge myself.
Okay.
And I charge myself property management fees.
That's good. You should.
So it ends up being...
Do you mind explaining why you should? To people that are curious why?
Yeah. So I think from a business management standpoint, first of all, it's good to ensure that you're budgeting for the property management fees. Secondarily, the reason I launched this whole property management company is it separates the ownership of the property from the management of the property. There's some legal protection that goes along with that. The last is I'm putting all of the employees are actually under the property management company as well. So the liability of having employees is separated. Lastly, we're giving the properties a write-off for an expense, and the costs associated with running the property management company are very easy to track at that point. So it keeps bookkeeping really nice, and ultimately it just allows us to provide a kind of a cleaner organization that stays 100% above board with how we're running everything. And there's a ton of advantages to owning your own business. So I'm not going to go into all of those, but really what it comes down to is that if you follow the rules the way they're written, you can be successful. And I think a lot of people try to go under the radar just because they don't know what the rules are. So there's doing your due diligence and finding out what the rules are and then following them can be a benefit.
Yeah, no, I totally agree. I remember my first 3-4 years in real estate, I tried to pay as little taxes as I could. Now I'd like to pay a little bit and actually do it properly. And I pay myself as an employee of one of my companies. And it just makes life so much easier. I can actually 100%. Go get loans now.
100%.
I mean, it's great to be able to just go refinance my house.
Yes.
And get a 3% interest rate.
Right.
And use that cheap money to go buy another investment.
Yep.
And if I was just trying to play it cheap my whole career, you can't just go.
Well, you'd be paying
really high interest.
Well, you'd be paying taxes as essentially an independent contractor all the time and self-employed. So
it's higher. Yeah,
which is higher. Yeah. So
it's not, in my experience so far, it's not worth being cheap as a real estate investor. What do you think about that?
I don't think so
in general.
Either. Yeah, I think there are business entities that have been created and are accessible to us that the federal government approves, the state government approves. So we should be utilizing those and running clean businesses. I'm 100% on game for that.
Yeah. Do you have any, since you've got quite a bit of experience in remodeling, do you ever do any fix and flips, or do you just hold everything?
Yeah, I like rent so much. I very rarely sell properties.
Smart man.
So I have done fix and flips, but it's pretty rare. And
Right.
usually it's because the final repair value when you put it all into kind of a final package, the total investment versus the rent that I'm getting produces a low cap rate, a low return. So in that case, I might be sitting on, like, say, $50 or $80 or $100,000 in equity that I might as well just get rid of and divest. But because I'm only going to be pulling in X number of dollars in rent. So, but if I consistently today, if I can pull close to that 1% rule on a finished project, I keep the property no matter what.
Great.
Yeah.
So you have your criteria that you've been sticking with since you first bought your very first investment.
It's becoming harder to follow that rule.
Right.
So, yeah. So the other thing that I look at is because this can inform the purchase, is what the rebuild cost is. That's important. So your purchase per square foot, that kind of stuff. So a lot of residential is going for up to $200 or more a square foot right now.
So you could just build.
So if I can keep, so this is actually my development argument at this point. So I own some vacant land that I've been putting off building because up until 2016, which was my last big purchase, all of my purchases I've been able to buy the property at $50 to $75 a square foot. Given they may need to remodel, my total investment is still under $100 a square foot.
Right.
Why wouldn't I do that? It doesn't make sense to go and develop a property if your build cost is going to be $100 to $120, $25, depending upon quality. I mean, if you can build if you can build a property at $100 a square foot, you're doing pretty decent.
Yeah, if you can do that. I don't know anyone who.
It's tough.
Who can?
No, it's tough. And the thing is that's for the building alone. That's not the property. So
right, that's not the lot.
If your structure is at $100 a square foot or anywhere close to that, you're doing pretty decent.
Yeah.
And the only way you can do that is almost, in my case, to be your own general. You start paying everybody out, and there's not a lot of money left, or I guess other way around, your costs can skyrocket.
For sure. Yeah, buildings in the market that we're in, especially in North Idaho, I'm not as keen because you're mostly in Spokane, right?
Mm-hmm.
Pretty much all in Spokane.
Yeah, all Washington.
Washington, yeah.
So
yeah,
regionally around Spokane. Yeah.
In my market, it's definitely less expensive to build, depending on who your builder is and what kind of connections you have. But I mean, you could make a killing just building and selling. But then there's a problem with where's all the land? It's so hard to find.
Right.
A lot. It's a dogfight out there.
It's interesting. Yeah.
Well,
there's a lot of
lately.
people looking to come to Idaho right now because you don't have to wear a mask.
Not yet.
Not yet. Yeah.
I'm seeing them more and more every day.
Next week, maybe.
Yeah. Man, that's been a ride.
Yeah.
I haven't really been as concerned as I guess I should have since this last week.
Yeah.
I had a friend that actually just died from it.
Oh, did you? Really?
Mm-hmm. Well, kind of a friend. I mean, we've hung out a couple of times, but
yeah, but still,
like
I mean,
to
know anybody really personally that has died from COVID is a big deal. I know one person personally that had COVID, but he was the whole, not feeling that great for a couple of weeks, and then improved, and he's cool. So,
yeah. And I know one other guy, a friend of mine as well, my age.
Yeah.
He got COVID back in February. I didn't know until just recently, but he got it back in February.
Yeah.
He also almost died. He was in the hospital for like 41 days.
Wow.
And I didn't know about it until just a couple of weeks ago when he told me.
Yeah.
He kind of kept it on the down low.
Right.
But yeah, it's interesting. Everybody on my Facebook, they claim that it's a conspiracy. I think it's real at this point. I know 2 people where it's affected them very badly.
I think it is real. It's one of those cost benefit arguments, though. You know,
Right.
I mean, if you're looking at it just
that's
from
a long
just
discussion.
from the numbers, yeah. If you're looking at it just from the numbers,
How much damage are we doing to our economy?
And what's the value of human life versus the value of the economy? You can't win the argument, no matter which side you're on.
No.
So.
It's not even worth talking about. You're just going to make people angry on both sides. No matter what you say.
Like I said, you can't win the argument, no matter which side you're on.
Yeah. I'm not picking a side.
Yeah,
I'm just going to
neither am I.
I'm just going to hope for the best.
When I go out in Washington, I wear a mask.
Yeah.
So
it's very responsible of you.
Sure.
I've worn a mask twice.
Yeah.
Sorry, everyone. Anyway, so what are your future plans now? No, you got a bank under contract.
Yeah.
What do you plan to do with that?
We're buying a bank building, and we're actually going to run. We'll be running our property management company, as well as the construction company. So.
Oh, okay.
Out of that.
So you're gonna use it for your business?
It's going. Yeah, we're gonna be single occupant in the building for now.
Nice.
It's a total square foot. It's actually a really big building. So
you got some vaults you can.
I have
throw your checks in.
If anybody's looking for some very secure storage, I have 3 vaults.
Nice.
Large vault. One of them is huge. But yeah, we have like 3 big vault safes.
Yeah.
That are in the building. So it's interesting. Down the road, we may end up doing something else with the building, but for now, it's as far as investments go, it's a solid investment. I'm buying a bank, which is the total square footage in the building is 8,800 square feet, or very, very close.
That's a very large bank. Okay.
It's got a full basement in it, and that's where two of the vaults are in the basement, and 8,800 square feet, and I'm buying it for under $50 a square foot. So that's how I made my decision.
All right.
So
very nice. Are you going to sublease parts within the office?
We could. Yeah, I made the deal based upon the price per square foot and the fact that we do need, at this point, we've grown to the point where having some sort of retail type front or clean office space to meet makes sense.
Where you can have tenants come in and
not just tenants, like business meetings and things like that. I mean, for me, we have so many systems in place at this point with our tenants. We can run it out. We have like full office in our basement. But because we run a lot of the tenants are paying by ACH, we don't deal with a lot of cash. We don't deal with a lot of personal checks. We don't deal with the USPS a lot. I mean, we've digitized the business.
That's great.
A lot to the point where we really don't need it. It's more of a convenience. Mm-hmm. But as a property investor as well, having a bank on a major north-south corridor in Spokane. Where I can advertise and where I can have people come in who are looking to sell their house, and I also do hard money lending. Okay. And so I'm a cash buyer, I'm a hard money lender, I'm a contractor, I'm a property manager. You kind of name it. If it's part of real estate, I like to be in the deal. So
do you do any of these services for the public, or is it all just for you? Except for, I'm guessing, the hard money lending.
That question. Yeah.
Other than the hard money lending, that's a given.
Are you talking about the property management?
Yeah, property management, contracting. Right. All I would imagine you're your number one client, right?
I'm my number one client. We do remodels. Yeah, we do. We do residential remodels.
Do residential remodels,
and that's part of the reason that I'm looking at adding crew members at this point is because it's picking up a little steam. When you do quality work, people talk, and a lot of our work is on referral.
Okay.
So, the fact that I'm looking at adding 2 employees means something, I guess. And the synergy of having the commercial building will help to facilitate that growth as well. Related to property management, because I am not a real estate agent, I'm not allowed to be a property manager in Washington State. In Idaho, I can do anything I want. It's the Wild West. In fact, I might as well expand to Idaho and be a property manager in Idaho because I have all the systems down.
Okay.
But we're not ready to do that.
Yeah.
We could. Like tomorrow, I could be in Idaho. I just registered
Could
in
easily.
Idaho and I could
Sure.
start banging doors.
I don't even think you have to register.
Huh?
I don't think you have to register. You just
I have to
say you're a
let
property
the.
manager.
I think
Well, you got to go to Vistaprint and print off some cards.
is that all it takes?
I think so.
I think
Maybe you don't have to. You can just tell people.
I'll just. Why don't I just? I can use my own printer though. I can do that too.
Yeah. I guess you could.
And I'll just start get the scissors out, start cutting business cards myself.
I'm
It'd
being
be great.
facetious, of course,
Yeah.
but yeah.
No, teasing. So anyway, so along that line, so today I can only manage for myself, but we have a broker kind of in the wings that we're aligning with to be able to manage other people's property, and that's part of the 2020 growth plan.
Okay.
My wife is actually 90% through her real estate education at this point. So she's going to be the primary agent for us.
Okay.
And then we're going to be aligning with a broker and open for business to manage other people's property because I've been asked multiple times if I can manage other people's property and I have to decline. So this opens a door. And from the standpoint of how we manage, I think it's also a unique position that I come from in that I'm not managing properties as a real estate agent looking to manage properties.
Right.
I'm managing properties as an investor and looking for returns on investment. And to manage other people's properties with that same mentality is protective of their investment. I'm looking at their return on investment just as much as they are.
Yeah. You've got enough seasoned experience to know what to look out for. That maybe a brand
Yes.
new property manager who owns nothing, but can legally manage your property.
Right.
Probably wouldn't be ideal situation.
I would go toe to toe with somebody like that all day long. In fact, the agents that had this property listed are from a large the bank that I bought are from a large commercial brokerage in Spokane, and the more they learned about me, they were like, "Oh my gosh, you got yourself figured out." So it's when they're offering that, I don't go into any deal being like look at me type stuff. But they started asking questions, and they're like, "Wait a second, you do what? You do what? You do what?" And they, by the time that we were under contract, they were asking me to be a hard money lender for some of their investors, and I was like, "Huh." Sometimes I don't even realize sometimes what the need in the market is, but because I've prepared myself and I have the capacity to meet the market demand when the opportunity presents, I think is my biggest strength.
Right.
So I don't know what the opportunity is all the time, but when I see it, I can jump on it.
So you're a professional opportunist.
Yeah, and I get opportunist, and I'm also really positive. I'm forward thinking. I don't come to really any day with a negative mindset. I look for the opportunity every day.
Nice. What are some of the biggest mistakes you've ever made that you would just warn investors to watch out for? If there's anything that comes to mind.
I've been pretty fortunate. I'll just have to say that. I think as far as advice goes, I think a lot of realtors would give this advice as well, is, don't buy something because you love it, especially as an investor.
Mm-hmm.
Be willing to walk away from a deal, even if you like the property, if the numbers don't work. and I've seen a lot of investors over time try to make a deal work so hard that when it was all said and done, they made a bad deal.
Right.
Because they were just looking for a deal so bad. And I say no a lot. I'm reasonably well connected with the wholesalers and things like that in Spokane. And they'd all love to sell me a property as a cash buyer. But I would say I say yes a 0.5% of the time. 1 out of 200 maybe.
Really?
I pull the trigger on, yeah.
Yeah. What's your main source of deals, if you don't mind sharing? Or what's worked best for you in the past?
So I
lately is probably tough, but
yeah, I prefer multifamily, but
so do you mean just something off the MLS, multifamily? Is that what you mean?
No. Okay. I guess from a source standpoint, I've got them all over the place. So like this commercial deal that I'm closing on the bank, that was commercial MLS.
Oh, okay.
So that wasn't an off market deal.
Is that like a LoopNet deal?
I'm trying to think. No, I actually drove past it.
Okay.
Driving for dollars, if you want to call it that. But I wasn't even planning on it. This is because it's a bank. Obviously, I knew the property was there, and I've seen it over the years. I've driven past it hundreds and hundreds of times, and a lot of the properties that I see that I potentially would be interested in buying have for lease signs on them, and the seller has ridiculous ideas about what they want if they were to sell it.
Right. This
one happened, it sat for lease for a little while, and then the day that I drove by, I noticed that the for lease sign had turned into a for sale sign. So I pulled the trigger. I ultimately looked to see, my wife and I text back and forth regularly about what properties we see, but that doesn't mean that we take any action on it at all. In this case, I saw the building. She texted me back because she looked the property up for me and said, "Hey, here's the price." And I was like, "Okay, we need to look at that at that price." And it's a little bit of a redevelopment project because there's no access to the basement other than by stairs. So I'm actually considering putting an elevator into the property because that opens up another 4,000 square feet for regular daily use. So
what kind of cost is an elevator? Do you have any idea?
I've only done soft investigations on what an elevator would cost, and if it's only going up or down in this case 1 floor. I've heard, and I hope I don't sound stupid, but I've heard that it's around $25,000.
Okay.
And on a building,
probably not something you can get on Amazon Prime.
It would be worth looking up, Yeah, so I mean, for an 8,000 square foot building, a $25,000 investment is
not too
pretty decent return on investment as far as I'm concerned.
I mean, that's a new staircase anyway.
Yeah,
sometimes depending on the grade.
Yeah, I mean, if I've misquoted
commercial grade staircase.
Yeah, if I've misquoted the price, don't shoot me. But honestly,
soft investigations.
Yeah, I would probably. Well, the reason I looked at an elevator is actually we've been looking at commercial properties for a while. And I had looked at another property that was built like 1920-ish that had staircase only going upstairs. So it wasn't a basement. So we were looking at what it would take to add an elevator. And that in that case, the previous owner of the property that we didn't buy in this particular case had told me that she had done the investigation. And she was told that for $25,000 she could get an elevator in that other building. So I'm kind of taking loose numbers from a third-party source and applying it to this new building. But, to be perfectly honest, even if the cost were $50,000 to open up an entire floor for additional use, and
could be worth it.
Accessibility could be worth it. So, that's. And it would actually be an elevator right down into a vault. So, do like key access only, like, a little private room down there type thing.
Could be like a club.
Yeah, could be.
Hey, investors, come store your silver here.
Yeah.
Do you invest in any like precious metals or anything like that?
So no, I've actually part of one of the hard money loans that I did. I had the collateral was silver, so I had a huge bunch of silver that I was hanging on to for a while, and interestingly, that person, when the loan came due, couldn't come up with the cash, and so I ended up keeping the silver, but I only kept it for like 6 months and waited for the silver price to spike and ended up selling it, which made me another like $3,000 in profit. So
Gotcha.
on top of what I got in interest.
Okay.
So I'm not against it.
Yeah.
I just love.
So that's interesting. So you did a hard
real estate way more.
So you did a hard money loan collateral. So was that like a cross collateral
No, it
thing,
was,
or was it a real estate?
it was. Oh no, it was. So yeah, it was. It was not real estate based. If it was real estate based, I would use the real estate as my collateral.
Okay.
So I would use the property as my collateral.
I wonder if that was just like their down payment.
It was no. In this case, it was a guy that was starting a new business.
Okay.
And he needed seed money to start the new business.
Right.
But I don't, I'm not going to loan on a build out in a new business or anything like materials or tools or whatever else, because if you default on that, what am I going to do? Come and take your cabinetry or your tools or your inventory or stuff like that? It's too hard for me. I don't want to deal with that stuff. But I like real estate. Mm-hmm. And silver or any kind of hard asset is really easy to loan against. So in this case, he was asking for a loan to start the business, and I said, I'm fine loaning the money, but you don't have anything that I'm willing to loan against. And magically, he came up with a whole bunch of silver he had been sitting on for a long time. And that's what we used. And originally, he didn't want to sell the silver. He could have just sold it and funded his own business build out. But when it came down to it, his business didn't grow as fast as he wanted it to, which happens a lot in business sometimes.
I'm going through that right now with the side business I'm working on.
Yeah, and because he had funded it with that collateral, I said, look, it's your call. I'm not even a mean hard lender. I didn't say pay me or I'm taking your. I actually held on to the silver. I physically had the silver in hand. I gave him an option to extend the loan, and he said, you know what, I'd rather just have a clean conscience and know that it's paid off. And he chose to essentially default on the silver, which was a perfectly reasonable solution as far as I was concerned.
Yeah. Okay. Do you other than real estate, do you invest in any other types of assets, paper assets, stocks?
I invest in stock, I guess. So I'm in the stock market, but not nearly as heavy. It's more of a diversity move for me. To the point where I would say it's more like a maybe 10% of my assets are in the stock market.
Okay.
And then the rest is real estate,
yep.
And then I obviously carry notes on hard money loans, but that's still a real estate investment as far as I'm concerned.
Gotcha. So what's your favorite thing to do then? Is it hard money lending? Is it contracting, buying a new investment property?
I like the physical properties the most. I think my wife would potentially argue that hard money lending is her favorite.
Really? Okay.
I think, she's doing a lot for the business, meaning that, as we look at how the business is run, I deal with the people in the property, and she deals with all the back end stuff. She's running the office. She's running the lease renewals and the tenant stuff, and even to the point where we have even though we have systems in place, tenants put work orders in, on our website. Where does that go first? It doesn't go to me. It goes to her. And so she's kind of dispatching that out to our crew to make sure that they're going and taking care of the tenant stuff. But when we do hard money loans, nobody calls and complains that the toilet's having a problem, or like whatever
Right.
it may be, or that the neighbors are too loud, or whatever you want to say, that kind of stuff.
There are no
So
physical
it's
problems.
pretty clean. It's a pretty clean return as long as you don't have problems on the hard money loan. But that being said, it's just paper.
Yeah.
And it's just money. I'm a little bit more connected in the business, meaning that I do know a majority of the tenants. It's very rare that I am not familiar with a tenant at all. I usually know them and have met them at least once.
Okay.
Before they move into the property.
So, I guess one more question, if you don't mind. When you self-manage 80 plus units, is it hard to remember all these people in your head, or do you keep like a good database and notes of your tenant, like their families and like what's their situation, their job? Like, do you have all this just in your head?
No, and so I very rarely know anything more after a tenant moves in. By the time we get, even honestly, some of them I don't even know what they do for work because I don't do the background checks.
Okay.
I just know generally who they are. But our database is really good. Now, my wife probably knows more about the tenants than I do from just like kind of a personal information standpoint. But for her to identify the tenant at the property would be very difficult because she doesn't meet a lot of the people. I end up showing up to the property and with the crew, and I kind of direct traffic with the guys when they're doing work. So I interact with tenants in that way. But I don't get involved in people's lives, I have enough to think about with my own. And the thing is, I think there's a personality to the business, which I think is nice. I think tenants appreciate that there's a personality to the business. However, I don't dig into how they live their life, which I think tenants also appreciate.
Yeah.
So it's kind of that blend of not feeling like you're just, throwing money into this like empty bucket, like where does this money go? Who is this person that owns this property? That kind of stuff.
Right.
And I think that's been, to be perfectly honest, I think that's been advantageous for me over the years because not every tenant has a perfect employment record. Not every tenant has, the ability to go 12 months in a row without making a late payment. And I have, over the years, had a number of tenants that we had to essentially end their lease on. Not necessarily evict, but say, hey, we came to an agreement. And that actually has saved me money as well because I haven't had to evict them. So we come to an agreement, say, hey, you haven't paid rent. You're not employed anymore. You're not going to be able to pay rent. I know you're not going to be able to pay rent. How are we going to resolve this? And giving them a smooth way out, giving them a respectful way out, has landed me checks in the mail from former tenants that have been gone for 6 months, a year.
Really?
And it's so surprising. The humanity that goes into that is amazing that, you show somebody respect, and there's a lot of respect that goes into it when somebody sends you a check and they don't even live in Washington anymore. Yeah, and they're like, hey, here's my $2,100 I owe you.
You did something right.
Yeah. But then again, I mean, that's
you're just willing to have a conversation and figure things out with somebody.
Yes, but I'm also, it's a business.
Yeah.
And you have to run it as a business. You can't. There's no. To your point, like I don't make exceptions. We have pretty clean rules on how the business is run, so there's no preferential treatment from tenant to tenant, but the processes that we have in place are pretty clean as well, where I don't feel like I need to use the court system to come to a resolution. In fact, I avoid that as often as I can.
So like if you're making a mortgage payment, your lender, say Wells Fargo, they don't typically just let a payment slide if you can't come up with it.
Yeah.
Like you sound like you're having a rough time there. Don't worry this month, just get it caught up. There's none of that. None of that with Wells Fargo, so why would you do that? But they might work with you instead of just foreclosing immediately.
Sure. Yeah.
We'll figure something out. How do you get caught up?
Sure. And I think the banks, especially with this COVID thing, I think, there was a lot of learning, honestly, coming out of the 2008 crash. And legislation is requiring banks to be more forgiving than they have in the past. But I think the way businesses are run are actually becoming more consumer friendly, which is also good, because a lot of these big organizations, big banks, ended up ruining some people's lives last go around.
Yeah, definitely.
Yeah.
All right. Any other fun tips for investors, maybe, or property managers out there that you have any fun secrets you want to share on how to make your lives easier? Obviously, going all digital.
Yeah, that's actually probably been the biggest thing. So, if you have the capacity and you have the volume to be able to justify organizing an ACH type transfer, bank to bank, and allowing tenants to pay that.
So is that different than like Cozy?
It's actually very similar.
Very similar. Okay.
Yeah.
But your own software.
But what we do, the way we organize it is we get clearance and we have everybody on an auto pay scenario. So it literally, like on the first of every month, it's an automatic transfer and we don't have to deal with a third party.
Okay.
So, and that's there are a lot of good tools out there. So Cozy is a great one, and I think Cozy is a great one if you just have a few rentals. Again, I've grown to the point where it makes sense for us to kind of take some of this stuff internally for our own business. But yeah, that kind of stuff. Any systems that you can put in place. Don't be afraid to pay a lawyer for protecting yourself. I think that's a big one because especially with the changes in the Landlord-Tenant Acts, and I think we're going to see more come down from kind of government wanting to have their fingers in the game a little bit.
Any attorneys that you recommend in the Spokane area?
Yeah, I'll name names. I use Mac Mayo. He moved to a larger firm, but he was a single attorney that he's been very responsive. So much like I'm trying, I have a personality to my business. Mac does a really good job of managing his customers and being accessible. There's a lot of good lawyers out there, but not a lot of lawyers that are willing to have you text and will actually, give you a quick answer on small stuff.
This text will cost you $17.
That kind of stuff. I mean, and he's honestly, he gets a lot of the problems that we have, if we have any, or questions that we have.
That's great.
And it's reasonable. He charges lawyer rates, which you would expect, but it's not. I don't feel like I'm nickeled and dimed along the way.
Right.
Whereas, we get a bill at the end of the month. They don't, he's not like, hey, thanks for meeting me for half an hour before you walk out the door. Here's the check you need to write, that kind of stuff, So we get a bill at the end of the month if we have anything. And if we don't have anything going on that month, it's nothing, So it's pretty clean working relationship.
Okay, great. Well, thank you.
Sure.
I appreciate you doing this. I know we could probably just talk for hours, but we got to end it at some point and go home.
Yep. Absolutely. Well, thanks for having me.
Yeah,
it was nice coming in.
I appreciate it. Thanks.
Yeah,
I'll see you next time.
Thanks for tuning in to the Investor Shed podcast. Please like the video and subscribe to the channel for instant access to all future episodes. If you or someone you know has investing experience or stories to share, reach out to us in the comments or via email.